Expense Management on the show today is Zaggle Prepaid Ocean Services. The stock has surged almost 80% in the last 1 year. The company recently bagged a contract and partnership with multiple companies offering fintech products and expense management solutions. To discuss this and more, we have Avinash Godkhindi, who's the co-promoter, managing director and chief executive officer at Zaggle Prepaid. Avinash, thank you for taking the time out early this morning and speaking to us on CNBC-TV18. Can you tell us, about these several partnerships? First, if you can elaborate on how the partnership with Hyperface aligns with Zaggle's mission, its value proposition, and what does Hyperface really bring to the table in terms of revenue opportunities? What do you see?
See, Hyperface is a great partner, Sonia. Thank you for having me. Appreciate it. Great partner as we build solutions for partner banks on the credit cards side, right? And Hyperface is not a revenue accretive partnership per se, but a product accretive partnership. And together with our solutions around expense management and vendor payments, we are able to augment the solution far better with the capabilities of Hyperface.
So if you can just elaborate a little more on, tell me a little more about Hyperface. And you said it's more like there's no real revenue augmentation, but a product augmentation here. So a little more on that.
So what happens, Sonia, is as a partner for the banks, our role is basically to provide our own software platform, which is expense management, employee benefits, accounts payable. And there are other capabilities that a bank needs in terms of onboarding, in terms of other digital capabilities, which we bring to the table because already Hyperface has built a very robust platform, and we are able to leverage their capabilities around onboarding and other such pieces which a typical bank would need for their journeys to be seamless.
Avinash, hi, morning. Prashant here. Sort of just pulling back a little bit, and let's talk about the quarter itself, right? Without getting very specific, because you'd be reporting numbers, etc. Could you tell us how many new clients you've added in the January to March period?
See, Jan to March, we've added quite a few. Overall, we've added 650 plus corporates, Prashant, in the year. And the beauty of the relationships that we've...
Avinash, third quarter, you added 105. Could you tell us,
Yes.
So in the fourth quarter, what was that number?
It's better than that, Prashant.
Okay, more than better than third quarter.
Overall, if you look at it, Prashant, the business spend management space is a very, very large emerging space, right? And we are very confident and bullish about how the space is emerging with so many possibilities coming out in just the last 6 to 12 months, whether it's our, impending go live with our fleet solution, with our, credit card offerings, with our Forex solutions that are coming into the market next year.
So could you tell us on the fleet side, which you just started, right? I think you mentioned that at the end of the third quarter, fleet loyalty card program, and you had kind of given some numbers as well. What is the size of the market in India? And you're just scratching the surface there. What is how is that ramped up? If you can share some numbers in the fourth quarter on the fleet side.
So the pilot went through successfully, Prashant, in the fourth quarter. The go live was always planned to be, full-fledged go live was always planned to be this year. And so we should see some strong trends with Torrent Gas, who's our partner. And we are also looking at other fleet solution providers in the market to be able to take this solution to them as well.
Okay, all right. Avinash is sounding fairly optimistic about business. What does this mean in terms of a trajectory? For FY25, what kind of a growth can you give us? And whatever you report in FY24, those numbers we'll know in a bit. So, but since you're in silent period, I don't need to comment on the near term. On whatever base you deliver in FY24, what is the growth? And also, how does your margin trajectory improve from here?
So on the growth side, we've already given a guidance of 40% plus growth for FY25, and we may revise it further. So we are very bullish about our prospects this year and the coming years as well, right? Margin, we've given a guidance of adjusted EBITDA of 10 to 11%, and we'll be able to achieve that. And so overall, we see great tailwinds for our business as we go into the new year.
Was it, Avinash, 11 to 30? The number I have is 11 to 13% EBITDA margins. Or is that
Adjusted
largely the
EBITDA
ballpark?
margins. Yes.
Adjusted.
Okay. And revenue growth, that was 40 to 50%, roughly.
40 to 50% last year, which we achieved, and this year we will be 40% plus is what we've given as a guidance, and we may revise it further.
Okay, you have an agreement with Visa as well. How has that done for you, and what is the kind of momentum you've seen in the last 6 months?
See, the Visa agreement has worked out brilliantly, and we're seeing a lot of traction overall with Visa. We also have started to work a lot with the other, network providers like RuPay and Mastercard. Overall, Sonia, if the business grows, right, and if the quantum of spends that we are seeing through our platform grow so significantly, then we are able to keep all the networks happy. Ultimately, banks and networks require volume spends and high quality spends, and that we are able to provide to them.
And, the Ease My Trip partnership that you have, can you tell us a little more? The last time you told us that that is doing pretty well. Any more such partnerships in these spaces? Because, these are spaces which are booming at the moment. So any more opportunities that you see here?
Oh, yes. We've signed up with RIA as well, RIA Travels, Tours and Travels, and that's an API integration that's also, underway. Ease My Trip is a great partnership. We already work with Yatra, who's a very strong partner of ours. So we are looking to offer a whole slew of travel options to our corporate customers and their employees through our expense management solution. When a corporate makes a booking of travel, they want choices. And through these sort of partnerships, we are able to provide those choices seamlessly through our self-booking tool.
But is there any opportunity to sort of do better margins because of these these several relationships? Because you've said your EBITDA margins will remain in the range of 11 to 13%. But is there scope over the next few years to move out of that range on the upside?
Absolutely, Sonia, because if you look at these partnerships like Ease My Trip and RIA, for every booking that we bring to their platform, we earn a commission, right? There's a rev share. So the whole idea is if you're bringing business to our partners, we would like to monetize on that. And similarly, if they bring in a corporate customer for us, we do a rev share with them as well. So it's a win-win. And these are opportunities which we are looking at across board to monetize. Once you have a large pool of spends, if you're directing it in different directions to different merchants or travel partners, you're able to monetize on that redirection or that ability to move spends for them. So you're able to monetize on that. Absolutely.
All right, Avinash, we'll leave it there. Good speaking with you, and hope to speak with you after your earnings, which should be out shortly as well. Thanks very much for joining us here on CNBC-TV18. Well, that Zaggle stock's done phenomenally well. It's come off the highs, of course, in the recent correction, but it's already making its way back up.